Okay. All right. Good morning, everyone. Let's go ahead and get started. Welcome. If you are on Zoom, you can type in any questions or any point you want to make in the Zoom chat. If you are on YouTube, I'm monitoring the chat as or the comments as well. So if you have any questions, feel free. So once again, welcome to the market update for the week ending September 9th, 2022. Crazy week, right? I hope all of you guys made it out alive. I mean, it's just we thought the market was going lower on Tuesday, but we since then, starting Wednesday, we rallied across the board from your SPYs to your Qs. So we'll go ahead and talk about that. Here's their first green week, snapping 3 week of losses since the Jackson Hole comments from Fed Powell. And, a lot of the rally this week was due to the fact that the Feds were actually very consistent in their message. So I'll talk about that. So anyway, 1 week IWM up about 3%, SPY up two and three quarters, two and a quarter. Two and a third actually. Qs up two and a third as well. Diamonds 1.52%. A lot of money flowing into consumer discretionary. If you monitored retail stocks this week, did very, very well. Lulu cannot, like, for example, I always tend to watch Lulu. Recently they had their earnings, et cetera. So that stock just keeps going up. But eventually, I think it's got to come down. But anyway, let's go ahead and move on to the slides here. So volatile, nonetheless, we saw a lot of whipsaw from red to green, right? A lot of reversals in the intraday. But on Wednesday, Thursday, Friday, the market rallied and it was quite directional for the most part. Nothing new from the Feds this week, right? One of the concerning things that happened on Tuesday or Wednesday, I'm sorry, is that the ECB dropped some hawkish comments. So we saw a big reversal on Wednesday, but the markets ended up green anyway on Wednesday, even though it was running up. And Thursday, subsequently, it ran past the 301, the Qs on 301. So we'll talk about that. So ECB, as expected, they raised their interest rates to 75 basis points. And during all of that on Wednesday pre-market, Powell was talking at the Cato monetary policy. And he said nothing really new. So the markets rallied right after he was done. So Fed fund rate pricing in 75 basis points in September and potentially 50 in November. At this point, as of yesterday, all right, you're looking at 75 basis point. There's a 90% chance now, 90%, that it's going to be 75 basis points at the upcoming FOMC, which will be September the 20th and the 21st. I believe the decision is out on the 21st. And of course, we have the CPI going into this following week. The Feds agreed. The market rallied. If you listen to the Fed comments over the course of the week, we had a lot of speakers, right? Bullard and Meister and Evans and George and Bernard. I mean, all of them was speaking every single day. But they are talking about 4% interest rate going into 2023 and potentially holding that 4% interest rate throughout 2023. So the market is basically has priced in potentially a 4%. Okay. Now, I don't think it's priced in a recession yet, but it's looking like a lot of folks are saying or speculating that we will not see a recession. Okay. But whether you're a bull or bear, you must follow the price action and market expectation and how, in fact, that it is forward looking. Okay. We saw the crazy dip from Powell's comments at Jackson Hole. And the markets looks like it's moving on. Could this be a wave 4, wave 5? We'll talk about that. But however, we're at this point in the November, okay, in the November meeting, it's also it's pricing in, or I'm sorry, it is the expectation, at least 81%, is that it's going to be a 50 basis point rate hike, okay, in November. Now, the Feds do not meet in October. They will meet again in November, and that's what it's looking like. Of course, a lot depends on CPI coming out this coming week, and of course, October as well. So anyway, the message here is once the Fed is in line, all right, with market expectations, the market tends to move up, okay? Yes, the macroeconomics still suck out there. Yes, we have a lot of issues in Europe, don't we? With the energy crisis and all that. And they're starting to print money in Europe. to bail out people with rising energy costs, and it's substantial, right? But the markets tend to continue to move forward from all that's going on. So whether you're a bull or bear, follow the price action. Put your ego, you know, put your ego aside. All right. Whether you're a bull, whether you're a bear, there's a lot of reasons for being both right now, right? But the point here is that you got to go into the trading day as with no ego. You just got to simply follow the price action. All right. So as I talked about last week, this was the chart at the end of last week on the NASDAQ. This is the NASDAQ 100. Market was way oversold, right? So we had the McKellen oscillator telling us that we are oversold more so than the entire 2022 up until last week. Okay. So what does the chart look like after the close on Friday, on September 9th? Look at this, right? The market had rallied, hit 12,000 on the NASDAQ right below, and rallied back up. And also we are above the trend line here, okay, on this rally. And look at the oscillators turning up once again here. But does this mean that the bottom is in? I don't know. I'm not smart enough to figure that out as of yet. Anyone who is picking tops and bottoms, you're just going to lose money all over the place in the market. All right. S&P 500 on the daily chart. I'm sorry. This is the weekly chart. Look at this bullish engulfing candle. All right. Surpassing the 4,000 mark, and we're pretty close to the 41,000 mark. I have the bull bands, all right, Bollinger Bands on here. It is signaling, all right, we're back at the mid band really quickly, if you don't mind me saying that. All right, look at the daily. All right, yes, the S&P 5, we do have a small gap that needs to get filled, but it looks like it wants to test that 4,100 mark. And again, markets oversold so much on the entire year. We had to rally here. All right. One of the charts that you guys have seen me talk about is the S&P 500 percentage of stocks above the 200-day. All right. So we hit this high here in 2018, hit this high here in during COVID, and the June 16th low. We tested that 50%, 50 plus percent, or 45% range, and we're back down. If you look at the structure, all right, if you look at the structure of this line chart, this pattern looks more so representative of this, okay? We may end up coming back here to retest this area, come back down a little bit, and potentially move up. But definitely this look here, all right, does not have the same look and feel for the 2018 lows and the financial crisis. The 2018, all right? Not 100%, the pattern looks like what we've seen during the COVID times. All right. Not pushing a bullish bias or a bearish bias, but I'm just telling you, calling out how it is. All right. Big week ahead, and we'll go ahead and we'll start moving into the charts. As you know, on Tuesday, one more trading day. Monday might be very muted. I don't see the market pumping anymore before a big CPI print, where we have already pumped the market last 3 days because of the Fed comments. All right. My projection is this. If we see a print above 8.6, which is obviously the forecast is 8.1, our last actual was 8.5. If an 8.5 or 8.6 print, I do think the market will turn back down again. Okay. Because it is stubbornly high. All right. What you want to see as a bear is that it actually hits the forecast or even lower. Can you imagine if CPI comes in at 7.9? I don't know if it will, obviously, but if it does, all right, due to lower energy costs, et cetera, you may see the markets rally even further. All right, back to potentially 310, 315, et cetera. We'll take a look at the chart, but that's not all for this coming week, right? We have core PPI coming out short on Wednesday. All right. On Thursday, you have retail sales and jobless claims. Those are just constantly weekly economic data that has to come out. And, last week wasn't looking really good. The jobless claims actually went down last week. So that's not good if you are a bull, because that gives room for further rate hikes from the Fed. All right. And of course, Michigan consumer sentiment, and that would be on a Friday. All right. Michigan consumer sentiment. It can't, I don't think the sentiment can get any lower than it has of recent days. Okay. Recent weeks. All right. So let's go ahead and jump into the charts. We'll talk about the Qs, the Tesla, the SPYs. Let's talk about the Nvidias and AMD of the world, right? The chip stocks getting beat up, but recently just rallied. Lulu has gaps to fill. I think that's a good short. Meta and VIX, and of course, I'm a San Francisco Niners fan, and this, you Niner haters, this is for you, buddy. All right, little side joke there. Okay, so let's take a look at the weekly bear flag of the Qs. All right. We have one less trading day in the following week. So obviously you have lesser volume. All right. I'm not too concerned about that because it was a short week. I don't think you can use the volume to justify, particularly this past week, that the markets is moving up on low volume. All right. We had a short week, but on the weekly, we're still kind of stuck in this bear flag. All right. Whether or not we're going to break out, we'll see. It attempted to break out at 334 just 3-4 weeks ago before the Jackson hole. And look at this. We bounced up on the trend line support here, avoiding disaster. All right. Back into the 280 level. All right. But we did get rejected here at the weekly 9 EMA. All right, so that's a spot to watch this coming week. We need that push over 307 to 308 to feel good, all right, about a potential continuation. But a lot, again, what has to do with what will happen on Tuesday. Upside target, all right. Look at the volume on Friday, though. All right, the volume is above the 20 SMA, which is really good, positive sign. I know it's summer month, and guess what? People are coming back from vacation, kids are back in school, so you're going to start to see volume increase into the fall. All right, and of course, there's also the speculation, or it's not the speculation. History shows that S&P 500 performs most poorly. All right, in the month of September, but it actually starts bouncing in midterm election years during the latter part of September. All right. So that's the trend. I published a chart maybe last week or so. You can find it on my Twitter feed. So upside target going into this week. I think we're going to test this 310. 310 is going to be a psychological resistance. All right. You have some volume gaps here that suggest once we break out of this 308 area, 307 area, 307, 308, we might chop around there for a little bit on Monday. But if we break out, it's potentially 310 to 314. So I'm going to put that as the potential upside target for this coming week. If we actually get a really bad CPI, I can't imagine so, but hey, I'll be open-minded. We're going to go right back to 300. All right. If it's a bad CPI, even further. All right, you do have some support at 300. If that doesn't hold, then we're back to square one, back under 300. So you need a good CPI for the markets to move forward. All right, and that will confirm the market expectations of 75 basis points in September and 50 basis points in November. All right. But with that being said, let's take a look at the lower time frame charts. Okay, I'm going to look at the 4-hour chart here. We're coming up on an area here. This is your EMA 100, EMA 200 or MA 200, right around this areas. All right. So we're coming up on that. And we tested this area, all right, back here. It couldn't hold support back in August 26th. So we're right back into that 307, 308 area. If this can push through, then you have volume gaps here, which confirms my thesis, I guess, that the upside potential is 313 to 314 in this coming week. All right. So watch out for that going into this week. Let's go ahead and jump into the SPYs. I'll start with the weekly here. All right. Avoided this, again, this is that volume support that I've been talking about, right? If you're a bear, I totally get it. I totally think that, if this is some type of wave 4 type of bounce on a weekly, then you're going to see this come much lower, but there's just volume. There is volume here that the bears have to contend with. We skipped right over this weekly volume gap, as you see, right? So you get a very nice run up. Supply area is going to be obviously up here. there, right about the 430 mark. All right, so that's your weekly on the SPYs. Going on to the daily, once again, this is the contested area for the bulls here. They held and they defended this area. We actually broke through on the daily EMA 9, 15, 21, 34, and 50. So that is very concerning for the bears. All right. You generally don't see this kind of thrust, okay, in a matter of 3 days. You can almost call this three white soldiers even. All right. So this is a very convincing move. All right. With pretty decent volume. It's not bad volume. It's actually still above 20 SMA. Look at the CCI. Look at the CCI crossing the bull signal here, all right? And your stochastic is curling up. So there is some room here to go. But again, everything really depends, once again, on what happens with the CPI print. So, upside target, I'm going to say, wow. All right. So if we get a really good CPI, I think we're going to tap right back into the supply zone. So I'm going to put a target here about 410 this coming week if the CPI is decent or relatively in line. If not, then hey, all right, 392 isn't that far behind. So that's the SPYs. Going into the 4-hour chart, once again, nice cup and hand, pretty decent, but a decent cup and handle structure happening here. With the cup developing, we may see some pullback on Monday, just maybe out of fear. But if we start pulling back to the 400, I think you'll see buyers at the 400 level with the SPYs here. All right, so let's talk about Tesla. Finally, Tesla is looking really, really good. You have a gigantic daily bull flag that's happening here, right? And it broke out this week, 3 white soldiers on the breakout. And look at this. It actually closed and didn't have any issues with the moving average 200 on the daily. All right, where before you had significant issues with the moving average 200 here, right? Here, but this move here is very bullish. We do have a gap to fill down to about the 289 level. My upside target for Tesla going into this week's we should see that 300 breakout. So I'm going to put 303 there. But if the CPI print is terrible, it's going to come back and fill this gap. So we can say that, hey, quickly, it's going to see this gap fill down to 289 level. So it may trend between these levels this coming week too. Also, if the CPI is in line or mixed and the market is not too excited, we may end up consolidating for a while. All right. So that's Tesla. Let's go ahead and move on to the usual suspects. Okay, the Apple of the world. Apple gave you a doji signal reversal on the daily on Thursday. I don't know if you guys caught that. That's a beautiful support, right? My downside target, if you guys watched last week's video, my downside target is 152.26. The lows came in at 152.75, all right, on Tuesday. So that hit, all right? So what's the upside target? Look out for Apple, right? It got rejected at the 915 EMA. You're starting to see these EMA starting to curl, all right? The 34 and the 9 and 15 all bunched together. It could potentially squeeze. All right, a lot of potentially a lot of resistance as well. But if the CPI is good, I'm going to put a upside target of 161. I think we should visit that 160 area once again on Apple. All right, going into the following week. All right, let's talk about VIX. Okay, let's talk about VIX. All right, VIX, you have a gap to fill. Okay, this is usually when the VIX starts coming into this 20 area, that is where you see a lot of movement in the markets, right? Especially the S&P 500. All right. Once it comes down, remember back in June lows, right? This was June lows, and this is August highs, right? So we hit this 19 and bounced, and then we have a gap up here. So downside target, if the CPI is really good, I'm going to put a target that this is going to come down to fill at the 21 level. All right. If that 21 level does not hold, then yeah, I do think the markets will run this week. All right. So that is the VIX target there. And let's talk about, I want to talk about Lulu. Yeah, there you go. Lulu, not a very good looking chart here. Okay. You have this is a morning star. and this is a evening star. All right. And that's a bad looking evening star on a daily. All right. It actually went up to about 355 level and pulled back pretty sharply. All right. Even though the markets was actually moving up towards the end of the day on Friday. All right. You have a gap here all the way back down to 295. I'm not suggesting that we're going to go back down to 295 this week, but I am suggesting that at least we're at a bare minimum, we should come back to test the 331 mark on Lulu. If nothing, if the money is moving into energy, if the money is moving it back into tech, and the money is pulling out of the consumer discretionaries or consumer staples, you should see Costco and all the retails of the world, Lulu, start pulling back. We do have retail sales data this week as well. So 331.65 would be a target for Lulu. I don't see this continuing to run up the way it has. Look at this. I mean, yes, you do have volume gaps here, and it's pretty close. If it continues to run up, I mean, you have some supply zones, but look at the volume up here. All right, pretty non-existent, right? So, I would suggest that this could be a good potential short. In addition to that, if you look at the volume on Lulu, look at this, right? We have big volume. Once it gapped up, all right, and it actually sold off, right? But then it started back running. Look at this volume. Okay, if that's not a clear indicator for short, I don't know what is. This is a bad evening star with a bad volume happening on Lulu. All right, so that's your bonus chart for the week. Let's talk about Meta. All right, let's talk about Meta. All right, Meta back in this area again, moving average 50, EMA 50. Okay, just got stopped short of that. You have some potentially volume gaps here on the daily. All right. But like I said, Meta could squeeze, right? And it's always one of those stocks where if the markets are really good, it runs like a bat out of hell, right? In the pre-market. So upside target for this week, I'm going to say, look at this, increasing volume on Meta as well. I'm going to say, if it can breach the 170, I think it'll get rejected up here about the 178s again, or potentially even finally break out, right? You see this heavy consolidation area for the last several months here since June, right? Always has trouble at the 178. It may eventually break out, but I'm going to say upside target, there's going to be a lot of resistance at the 175 level. So I'm going to put a target there for Meta from 175 going into the week, see how that does. And we'll revisit all of this coming up next week after the big week. So once again, going into the following week, you can go to investing.com to check out the calendar. 9/12, all right, Tuesday is the big day, all right? Tuesday will determine the course of the week. Core PPI, retail sales, jobless claims, Michigan consumer sentiment, a lot of moving parts in the markets this week, okay? So what should you be doing? Practice good risk management. Do not enter positions without a plan for your stop, potential plan for your profit taking. Be nimble, all right? And no ego in trading. Trade the day and stop worrying about what you think is happening in the world. Yes, there are plenty of bad news in the world. A third of Pakistan is underwater. Europe, Nord Stream, all that stuff. China and Taiwan. All right, lots of issues in the world. But hey, you still, if you want to make money in the market, you still got to play the day and the direction of the day. All right, so let's go to go to questions. All right. VIX and OPEX up. Yeah. And then we have OPEX this week as well. Yes. Very good point. All right. Could be disgusting bull trap. Consider economic news next week. I hate the gap down there. Yeah. I mean, every time I post a bullish chart on Twitter, I get a lot of feedback, right? It's sometimes very negative. And all people are concerned about is the macro news. And I totally get the macro news. But do you guys realize, though, the market's always forward-looking? Unless you get really bad news that the market was not expecting, all right, then the market starts to downturn, obviously. But you look at all of what the Feds did this week, all right? Their message was actually aligned this week, and the market enjoyed that. They like certainty. The markets like certainty before people pour money in, right? If money is pouring in, that means what? Risk on. That means people are optimistic about that 4% target rate. All right. So yeah, inflation is here to stay. All right. Good luck, Mr. Powell, getting it down to 2% by the end of the year. I don't think that's ever going to happen. However, it's going to linger on. And just, and as long as it lingers on, you're going to get some choppy action throughout the markets. But does that mean that you can't make money on a day? You can certainly make money on a day. All right. Look at this downtrend falling wedge. All right. If you're following the cues on a daily, this is your classic falling wedge, right? And we're not making new lows here. Okay, so far, I'm not saying that we won't, but it's going to retest that 310 trend line. Okay, right here, this falling trend line. If it breaks out of 310, you're going to see potentially a strong move, all right, by the markets once again, back over to 334. I'm not saying it's going to happen in the next 10 days. I'm just saying that's what it's looking like. If it breaks this 334, all right, if it breaks this area, you're looking at the market potentially bottomed, all right, back in June. Okay, so follow the charts. That's what it's suggesting. But if it rejects here, if it rejects the 310 next week and CPI is terrible, then we'll go back down. Okay, and your trend line support down here would be the 275 level. All right. Okay, so oil tent. Yeah, oil is let's check out XOE actually. Yeah, XLE's no, oil is up a bit. Oil actually reversed, but I mean overall it's down since the highs here on 85 level on the XLE. You do have the oil CCIs, all right, and the stochastics turning up again, all right. I saw a statistic somewhere. I totally forgot what it was. It was that never mind. I can't remember the statistic about oil. Generally, I think the statistic was that suggesting that oil moves down. Obviously, so does inflation in the markets. There was something very specific. I totally forget. I'll have to do some thinking on that. Anyway, so with that being said, I don't say, Rock, what do you think about TNX continuing to rise? Yeah, I mean, if you look at the rates this week, right, pretty muted, all right, kind of stuck in a consolidation level right above 3. I understand that it is shockingly high, all right, for a 10-year rate. And the yield curve is the issue with the yield curves is still there, all right, but the market's just continuing to move, all right. It has moved in the last several days, so we'll see what happens with TNX. TNX is not. If you're going to follow the day-to-day action, I would rather follow VIX than follow TNX, okay, or the 10-year rates. If there is significant moves on a TNX, the markets will react for sure. But if it's quite relatively muted, you need to be watching VIX on a 5-minute chart, okay, or a 15-minute chart to see to kind of determine the direction on the day or even how the markets are moving. All right. So with that being said, okay, well, I think I'm pretty much done here. For those of you, that follow us, please visit therockTradingCo.com if you want to join our community. We trade actively every single day. This week, I did it on average about 4 to 5 trades per morning. And also we swung some calls, especially Thursday. We swung the Q calls and the Tesla calls that paid out pretty nicely on the Qs and the Tesla. And man, I should have held the Tesla throughout yesterday, but actually we bought it and actually holding some 305 calls for going into next week. So with that being said, I hope you guys enjoy your weekend. Thank you for tuning in. And please, if you're on YouTube, please tap like and subscribe. I really appreciate it. So with that being said, I hope you guys have a fantastic weekend.